All right, welcome back. Our second block is designed to get into the mechanics of how you actually build Canadians' defense innovation ecosystem. We have 3 sessions ahead of us, and they move from ecosystem infrastructure to company-level pre-IPO strategy to federal policy. We start the second block with the capital defense pipeline, how sovereign defense technology actually gets funded, what it takes to move institutional and government-aligned capital towards early-stage companies, and what founders need to be ready for it. Moderating session 4 is Matthew Lombardi, co-founder of the Icebreaker, Canada's defense innovation network, and partner at TELUS Global Ventures. Matthew, I'll leave it to you.
Okay, great to meet everyone. Just as a quick show of hands before we introduce our panelists, who here has ever invested in a startup? Okay, about half the room. Who here has ever worked for or run a startup? Okay, awesome. Okay, just trying to get a quick level set. I want to introduce quickly our 2 panelists here, our venture capital allocators. So I'll start at the far end. Peter, maybe just a couple sentences about what you do.
So managing partner, BDC, Strong North Defense Fund.
Hi there, I'm Michael Smith. I'm at 19, Canada's only defense and security-focused venture capital fund.
Okay, awesome. I want to jump in and just riff on a couple of things we've heard. So Miles on the panel right before this talked about the evolving capital stack. And before that, Hunter at Juno talked about the advantages with capital markets in this space. So I want to throw it to both of you guys, and we'll start with you, Michael. What do you think is the best reason, or what are the reasons that the modern battle space would require defense financing to be of the venture variety?
So, stitching together previous comments about the, pain of procurement and understanding end user needs from a completely self-interested and biased perspective, I think if you can find investors that understand those problems intimately, one, they're not going to shy away from the investment opportunity based on challenges that are table stakes. So these are challenges that may scare away generalist investors, whereas we understand that to be the nature of the environment in which everybody's operating. And then on top of that, it is our belief that we offer insights and helpful guidance to navigate those very challenges, while therefore helping you capitalize for the specific valley that certain companies are going to have to cross as compared to, say, your SaaS model.
Same question to you, Peter.
So Strong North was stood up by BDC, which already has a very large platform. Probably everybody's aware of it, of everything from seed fund to growth funds to acquisition funds to special program funds. Strong North is a bit different. We have 2 masters, and I don't think this is that different than 19, and we would be co-syndication partners. But we have a mission mandate, which is sovereign. So the capital was given by what we refer to as the shareholder, which is the Prime Minister and the government, in order to deliver on the requirements of the defense industrial strategy. And so we consider mission. We also consider financial reward. And BDC returns capital to the federal government, has for many years now. So it's not a net consumer of capital, it's a revenue source. So we have to be responsible financially, but also on a sovereign side. So in terms of capital in the marketplace, what we see with that as our mandate is we are a bit different than traditional venture and traditional private capital. We will lead preferentially, so we are trying to go into the defense industry and be the lead. You can find a lot of syndication partners, but at the earlier stages, it's very hard to find leadership. And so we come in with that. We also can, where it makes sense, arrive with sizes of capital that can wash away the problems that are endemic with the defense industrial sector. Many, many decades of peacetime have eroded the revenue base of many of these companies. So we see strategically needed capital and functions of the military sitting there in companies with balance sheets that have toxic levels of debt and other things, but they may see rising procurement. So it's very difficult. It's case by case. Don't run away and assume that I'm saying we'll fix everything. But we will take an inordinate amount of risk and do things other funds will not. But once we are done, the capital that crowds in on top of us absolutely finds a very different risk profile. Landing Zones International, which we funded our first made public deal. If you saw the Photonic announcement, those are two extremes. One is pure venture. They're both high sovereign. One, we fixed and worked with the company, and both are doing incredibly well. Those are the kinds of things we're set up to do, and I think we're very unique and different, but highly partnered with 19, who is the leading defense venture fund outside of our platform in Canada. So we look forward to many syndications.
I want to pick up one thing you just said around looking at the mission of companies. So what makes a company at the startup stage interesting from a mission perspective versus actually fundable for you?
Yeah, so you can have a mixture of those signals. You can have a high mission signal but be unfundable for the preponderance of the other problems with the company, or it looks like it ought to fit the mission, but there's no procurement signal. Basically what we do is we look at the DIS, which is very high level. There's 10 categories, everything from AI and autonomy, quantum, et cetera, sustainment, training, on and on. They're just, everybody should read the DIS if you haven't. Then if it's in one of those categories, then we ask the deeper and harder question, where in NATO is somebody buying that? Would buy it, should buy it, wants to buy it, or wants it to be sovereign so they could buy it even if it's already supplied outside of the Canadian borders. And it has to pass one of those tests reasonably. And there is no one, these aren't waterfall tests. I mean, there's many investors in the room, you know how it works. It's you balance out all the signals and you figure out if that meets your risk profile, risk return thresholds. So companies with that second level of test, you can attribute a procurement signal to it and a procurement pathway, if not a signal, that will tip it over often, and at least then it goes through what we call Master One's criteria, and then we move on to standard venture financial due diligence.
I'm going to come back to your point about sovereignty because it's important here, but you mentioned the defense industrial strategy, so let's just talk about that for a second, and in terms of government signaling. So I'll move to Michael. Michael, you've been doing defensive venture capital longer than anyone in Canada. What do you find, and based on this defense industrial strategy, what's the biggest mismatch between what the government says it wants and what you've seen investors be willing to back?
I think I can answer that while also perhaps adding on to what Peter just mentioned. And it also speaks to the difference, but also complementarity of our missions, right? Like, at the end of the day, our mission is a sovereign Canada. But you are public, I am private. Public-private partnership is absolutely the way of the future, so there will be co-syndication. Our Venn diagrams overlap quite a bit, but at the end of the day, my base obligation is to find outsized returns for my investors. And so when the mission and the capability that the company is offering converge, that's usually, for me, like the strong signal. If it's tied to the defense industrial strategy, like, huzzah, but it's not what I get out of bed to solve, right? Like, I get out of bed to solve problems across the NATO alliance or across the Western world. A good chunk of my capital will be deployed in Canada for obvious reasons, but for equally obvious reasons, a good chunk of my capital is going to be deployed outside of Canada when best-in-breed technology exists elsewhere. So if it is here, we will find it and we will invest in it and we will hopefully export it. But the inverse has to be true as well, because at the end of the day, as someone who used to wear the uniform, and of course my partner Glenn Cowan, who wore the uniform in a way that very few people really have, like, you have to deliver a capability to the end user that is relevant and operationally timely. So circling back to your original question there, Matthew, about the defense industrial strategy, like, it is a macro signal to the market, but for those of us who have existed in it and are building within it, like companies, investors, like, there was nothing new really presented there. It was more like the government playing catch up and acknowledging the thing that privately we had all realized for a long time, which was that, the defense emperor wore no clothes. It was time to invest in the things that we needed. The threats are real, and honestly, waiting for the government to tell us what is necessary means that, like, if we are responsive to that as investors, we are too late. Like, I think any venture capital investor's job is to envision the future 5 to 10 years out and have a thing ready for when the consumer is prepared to buy it. In this case, our consumer generally is the crown or another government. We can't wait for them to tell us what we need. It has to be there when they finally come around and they're like, oh man, not only are drones a problem, countering drones is really difficult too. So I hope that meanderingly answers your question.
Yeah, and I want to pick up one thing there. You mentioned wearing the uniform, and I saw that your business partner, Glenn Cowan, was recently in Latvia, kind of on the front lines with the Canadian Brigade. Talk to me about what you guys typically will see when you're pitched in terms of, something that looks good in a pitch deck versus something that's going to survive contact with the end user in the battlefield. Like, what do you look for when you're diligencing?
I would say, are you meeting a true capability gap? Like, are you delivering a faster horse or are you delivering a car? And a lot, no shade to the drone companies out there, present companies specifically not included, but a lot of drone decks are faster horses, right? Like, it's not a step change. Like, what, you're going to compete on cost, or you just happen to be Canadian? So, what is the real need, and is it being met? And then honestly, this ties to another feeling of mine in the Canadian marketplace is I am less interested in a company that is seeking just to take Canadian market share versus a company that is seeking to dominate its vertical and just happens to be domiciled in Canada, right? Like, the best success stories we tell about Canadian companies are scrappy little Canadian companies that went out and dominated the world. Why should that be any difference in defense? Like, we have a strong pedigree and history of doing that. So of course Canada is your land and then you expand. But I want to see ambitions beyond taking a small chunk from the primes only within Canada, because that tells me that what you're offering is not necessarily in demand across the alliance or is not differentiated. And then it becomes, quite frankly, less interesting.
I want to talk a little bit about this sovereign concept that's come up a couple of times today. And there seems to be a strategic tension between sovereign versus interoperable. Miles articulated it as, akin to the auto industry. Should we be focused on things that Canada can export? You touched on that as well. Peter, I'm curious from BDC's perspective, when you go out and you're trying to be catalytic in the ecosystem, where does that balance live between sovereign and, having to be interoperable as an ally?
So they're not, in my mind, they're two different dimensions of success. So a great venture company is absolutely everything that Mike just described in terms of it is exportable. It is something that can compete on the global stage. That is definitely something that expands the market for the company, and therefore likely the company survives. And if that company can then survive and grow and is domiciled in Canada and has therefore a special relationship with the CAF, could be bought from if conflict, limited supply chains, and limited access globally to other suppliers, that meets a sovereign test because it's accessible under stress. So other kinds of sovereign, though, are different. Other kinds of sovereign are, we absolutely operationally have to have this. There are restrictions today already that may not have to do with open hot conflict or anything like that, but ITAR. There's an increasing concern about ITAR, things like satellite launch. Satellite launch may include things like sensing and national security assets. In those cases, there is a price to pay for sovereign. It is more expensive than global market, and it needs to be paid. If you're serious, if your national security advisors determine that you must have this and you must have free and unfettered access to the thing, then guess what? It's going to cost you more. So would BDC as a venture investor go into that? Well, only if we check with the shareholder and find out that they're willing to pay that price and that the thing is financially sustainable. Or there's a third category of sovereign, which is you need it and it is never going to be a viable business. Get over it. It's not possible. Canada's not big enough of a market. And then that is to be funded by sovereign capital, and largely speaking, sovereign capital alone. So there are 3 or 4 categories there. There's more. I could continue. The pipe is hundreds of companies deep. We have been doing exactly this kind of analysis and producing memos and briefing notes for the government to say, here's what's really out there versus what you put in the DIS, and here's what it means from a funding standpoint. If you really say you need that, you need to do this, and you need to realize that that is, here's our financial input of the landscape.
Right, and so Venn diagrams again. But to your last bucket of sovereignty is like very important to understand, and then figure out, there's certain things you're going to get private capital to crowd into, and then there's others that you probably just aren't, but are. And I will remind anybody who's willing to listen, the primordial duty of the crown is the defense of the realm. We've forgotten that a little bit in this country. It's not healthcare, it's not education. All of that falls by the wayside if you can't defend your sovereignty, whether physically, digitally, virtually. So just put that out there for a reminder. Thank you. I didn't come up with that concept. It's just a concept that was forgotten in this country for the last 30 years. That comes with a cost, right? Like a literal cost. Now, the other Venn diagrams that we need to paint are, and this goes back to the defense industrial strategy of like the buy, build, partner. What is Canada really good at that almost nobody else is good at? What does the alliance need and want? And then what is so prohibitively expensive that even if we were to pile into it with sovereign wealth, we probably wouldn't be able to generate a capability in an operationally relevant time frame? And then I think these are your areas that tell you where Canadian founders should be focused, because right now, defense is a broad wave, and within it, everyone's like, I'm going to do drones, I'm going to do sensors. And yes, these are all important things, but if they're not differentiated and if they're not competitive across the alliance, we're kind of wasting our time. So like, what are we good at? What makes us indispensable to everybody else? And then what becomes like attractive to private capital, I think are good places for founders to look and investors to focus on. And they may not be like very pretty or exciting, but often it's the like sustainment, logistics, digitizing these, helping them with AI decision support. These are like wildly important ideas, right? Like the old, what is it? Amateurs talk tactics, professionals talk logistics. Like, it's real. Like, we are going to be sustained. Like, conflicts will be sustained probably outside of our borders. That'll be wildly complicated and expensive. Sorry, got a little off track there, but like places to focus. Again, the DIS is like a macro statement. You need to drill down, and then just as a personal aside, the defense policy, I think, suffered from a real lack of imagination. Like, the Canadian Armed Forces is still trying to be a mini Cold War army, like jack of all trades, masters of none. Instead of focusing on the things that the CAF is really good at, we're still trying to sustain like armor. Like, I don't see the point. So, we need to be a little more imaginative here overall.
There's a lot of VCs who are suddenly defense curious. Sounds like you two need some co-investors, so that's probably good news. How would you sort of coach a venture investor who's got some dry powder, who's interested in the space, in terms of how to think about the space? And Michael, you gave a little bit of color about, if you're looking at drones, it's not about, building the faster horse. But how would you coach someone who's brand new to the space to look at it?
Well, one, I think some of the truest words in life are expectations are premeditated grievances. So like, and there's a lot of lawyers in the room too, right? Like, you manage expectations. So I think writ large to the, there's a requirement to raise the IQ of defense investors in the country. And step one of that is like, it's not your average life cycle. I wouldn't say nothing about it is the same, but I forget who mentioned that mining is actually like a pretty decent comparison here. Like, long time frames with huge CapEx and OpEx, sometimes difficulty scaling, regulatory hurdles. So it's trite to say not for the faint of heart, but you just can't go into it expecting necessarily quick exits and flips. despite the macro waves, because like the macro wave is going to push capital in, but it still has yet to like break the dam of procurement, which the DIA is coming and it has its legislation and it can't get worse, right? Like ostensibly there's only room for improvement. But even then, like I forget also who it was saying, maybe it was Miles who was talking about how good American procurement is. That's only in comparison to how bad our procurement is. If you talk to them, they also feel like they're banging their head against the wall and all they're gonna do is complain. And so if that's what we're targeting is to be like them, we're still gonna arrive at a place where it doesn't move fast enough and we're super frustrated. So like there's this lag from like the government has accomplished the easy part. We pat ourselves on the back for policy and we're starting to push money out the door. Now everything that's difficult about this is about to happen. It's going to happen all at once. And it's not going to necessarily happen on our time frame. It's going to happen on the time frame of geopolitics. And so, you know, like it's just going to come sort of crashing in, and then maybe the dam unlocks really quickly. But circling back to the original point, for the other investors, like it is absolutely a place where opportunity exists and money can be made, but you have to go into it like eyes wide open. I think more than a lot of like venture vintages have not reflected the like realities of the defense space.
So everything that Mike said applies. Maybe a couple of things to add to that is certainly probably standard venture funds are best focused on dual use, venture return, quality. So we sort of break the pipe into 3 buckets, broadly speaking. First bucket is high growth. It's typically software, cyber, something along those lines. It has low distribution cost, has a very SaaS-like. Quantum would be the same thing, but it has the potential for venture class returns. Bucket 2 is standard defense. It has the potential for IRRs that don't typically meet venture returns, except under really severe procurement wins, which may or may not happen. And bucket 3 is sovereign and has multiple components to it. New venture investors generally, we won't syndicate. As much as we'll bring 2 million to 20 would be our sweet spot per round. We're typically leading, so the round is double that. We'll even go as high as 55, 60 million. We put 40 million into Photonic, we announced yesterday. Those rounds, you want to be in the higher growth classic venture rounds if you're a standard venture investor. Your investment agreement with your LPs is probably not going to let you go into the defense side. Funds like 1.9 are extremely rare. They have the insight and the experience and the military experience to actually understand procurement and to venture where others wouldn't, to find those deals that are pure defense but actually represent venture returns. Those are hard to find. I would say your best strategy would be follow one of us that's already in. If you're following us and we're bringing enough capital to right the ship and to give it a long runway, longer than you normally would fund into. So standard venture, you know, look, you got 12 months runway or 18. Well, that's great. We'll do value creation. We'll up the value. In defense, I think you want to be thinking it longer. So you want to be funding 2 to 3 years at a go. And you want to make sure the cap structure is simple. And if dual use is available, great. But watch out, venture investors, most dual use is a myth in defense. Most of it that's claimed is absolute. Look at the nods from the general, who bloody well knows. So David, right in the middle there, will tell you all about it, and so can Mike. So those are some tips.
I want to add to that too. Like, we have historically not shied away from investing in defense, but it is by no means the only like category we are looking at, and probably will not return our fund from pure play defense investments. Like, it is just the nature of the industry. So we will be selective in the pure play defense opportunities that are presented to us because we see the value in them, you know, existentially, and then also in certain cases from a pure returns perspective. But like, at the end of the day, there are companies that cut across all sectors in their value that are probably the things that are going to return the fund. And so, like, you're going to hear next from Kath and Sentinel RD, but like, she's a manufacturing company parading as a drone company. Like she's making drones, but the most interesting thing about her and her company is that they make stuff in really cool, novel ways. And so it's drones today, but it's humanoid robot parts tomorrow or whatever else, right? Like we need to fundamentally start making stuff again, not just software.
One last thing, 4 VCs in the room. Don't forget BDC is the largest fund-to-fund investor platform in the country. So if you haven't applied to get capital from BDC into your fund, you should talk to the fund-to-funds people. That's not me, so don't come up to me after the end. They're on the website. I'm not sure if they'll love me for plugging them on this one, but it definitely is a port of call for you.
And you can get 2 ShamWows for $9.99.
You got it. Special 3.
Sorry, couldn't help it. Okay, you guys talked a lot about like lumpy revenue and like long cycles, and I appreciate the mining comparison that's come up a couple times. So, given that reality, and Peter, I enjoyed your discourse on having to fund in multi-year cycles. What does credible early traction look like for a defense startup if they haven't yet won a procurement contract?
I mean, at that point, it's analytical. It's speculative and analytical, but we will go find the experts. So in that, it involves directly going straight to the CAF, straight to NATO, straight to the DND and the appropriate branch, find the actual procurement officer, and even better, the force generation officer or leader who is charged with understanding exactly how that thing or its class of things is to be used within the latest defense strategies that are being fielded. Drones in particular, I have been pleasantly surprised and honored to deal with some of the CAF members. The level of expertise on the people that we as taxpayers pay to understand what's going on in a field of drones where there's 11,000 drone companies in the NATO alliance alone is staggering. They're incredibly knowledgeable. Yeah, they've seen it all, and so we go directly to them to get that signal.
Last question for each of you, so it'll be different. Peter, by 2030, what will the Strong North Fund need to have achieved or backed to claim success?
I mean, by 2030, so we're in mid-2026, so you're talking about 3.5 years from now. So typically these investments, particularly in defense, are long-sighted. We're set up for about a 10 to 14-year run. By 3.5 years, I would expect some of the high-growth players would have already either returned the entire fund or heavily. So you'll be able to look at the balance sheet of the fund and see the carried valuation's huge. Hopefully the exit valuations have already literally returned the fund. I literally believe that's possible. Beyond that, the mission master would say that at least 1, 2, or 3, we will make, probably by that point, the fund will be $600 million to $1 billion, I would imagine. And at that point, we will be running around with something like 50 to 80 companies in the portfolio. Some number, 2, 4, 5, 10 maybe, if we're really lucky, will be considered strategic if you go and ask the battle space commanders in the CAF that some new innovation, some Canadian entrepreneur delivered something that had not been seen before. If we fund 1 or 2 of those, then for the price tag, and we return all the money, and that money then pays back through the shareholder, I think we will have had grand success.
Last word to you, Michael. What is a underfunded capability that the NATO alliance is desperate for that Canada can and should be funding, exporting, and leading in?
So not sexy and not even probably venture backable. Energetics for munitions and rare earth element refinement. Like extraction's easy, relatively speaking. And if you never want to sleep again, research the rare earth element supply chain. And then it'll also beg the question of every company that comes to you selling a drone or anything with an electro-optic sensor or a magnet or a laser, and then ask them how they made it, or battery, and see which part of it didn't touch the Chinese supply chain. Like we are behind the 8 ball strategically on this one. And so the quicker the alliance, and then also circling back to what can make Canada indispensable, we can make we have everything we need to make energetics, munitions, and then we have a lot of the rare earth elements, but we need to both extract and refine them. We need like takeoff arrangements so the Chinese can't crash the prices. We need to make it like long-term sustainable. Those are not necessarily venture bets, but those are fundamental to our ability to maintain sovereignty, and kind of everything else builds on top of that.
Awesome. Thank you both. Oh, Peter, last word?
Just to comment on that, again, agree with Mike. That whole class of sovereign-sized projects that's in the DIS, those need a solution. We at Strong North, we're often the very first, the tip of the spear, first place they call. We need to stand up 50 million to start the cap stack, and they ask us for the first 25 of that. We're there for that, but there's bigger things in the cap stack needed. The DSRB, the Sovereign Fund, there's a job there for those two institutions. So if I might close on a more positive note, the government understands this clearly. I'm just making a personal comment. That gap is there. There are institutions being stood up with serious capital to address that, and procurement signal that goes out in a decade away. And I would hope that the players in this room that command the public markets, et cetera, would understand that. If we all get in line, I think there's great financial and mission success available to all of us to meet these needs.
Thank you both.
Thank you.